Well, plenty of businesses right now weighing up the Reserve Bank's rate rises, and it's word that more are on the way. Ed Boyd is speaking with Andrew McKellar, Chief Executive of the Australian Chamber of Commerce and Industry. Ed?
Thanks, Ross. Look, Andrew, thanks so much for your time today. Let's just start with the Reserve Bank raising rates. How tough is it now getting for businesses to borrow money?
Look, I think it's a real issue of concern now. We've seen 9 interest rate increases in a row. I think that really is starting to bite. The evidence that we're looking at that was coming through in the December quarter is that business conditions were really tightening appreciably. We're seeing the retail trade data that came out a couple of weeks ago. We're seeing lending data now in terms of new housing construction. All of these figures are starting to really turn around, and I think we really need to, reflect on the impact that that is having in the real economy.
Yeah, the RBA is obviously doing this to bring down inflation, but that only happens by consumers tightening up their spending. So that's got to be bad news for businesses who rely on customer spending to survive.
Well, look, I think one of the issues that we face at the moment is it's really on the supply side that we're seeing the real constraints. Of course, the Reserve Bank has been trying to manage, any overhang in demand that's been there and that contribution to inflationary pressure. On the supply side, many businesses are really struggling with, supply chain constraints, labour shortages, all of these things, rising energy costs. Those things are starting to bite. It's really impacting profitability. It's impacting investment decisions going forward. So our concern is that we don't want to see the Reserve Bank overshoot. We do think it now needs to proceed with real caution. And the thing that is worrying us the most is the signal yesterday is that there could be more in the pipeline.
Yeah, the theory from the RBA is with inflation, once customers tighten their spending, businesses are forced to then reduce their prices. So how does a business able to afford to reduce their prices at the moment when you say costs are going up?
Well, that's true. So margins are being squeezed. We are seeing that for many businesses now, particularly for smaller and medium-sized businesses, profit margins are declining. And if you're going to keep your business going, then they've got to keep an adequate margin in there to keep the business afloat. So look, we are concerned. Of course, the whole objective here is to reduce some of the inflationary pressure that has been there. At 7 or 8%, it's far too high, but we are hopeful that inflation has peaked in the December quarter. We want to see that coming back. Whether it can get back into the Reserve Bank's target range of 2 to 3% anytime soon remains to be seen. But we don't want to see the Reserve Bank squeezing the life out of the economy and damaging business. I think those are prices that we don't want to see the economy paying.
Yeah, Governor Philip Lowe yesterday spoke about trying to avoid the wage price spiral. What's your sense of wage growth in the business sector right now? Are wages on the way up?
Well, they are. There's no doubt about that. Labour shortages have been acute across the board, and that is beginning to translate into higher wages. I think at the moment we're looking on average in terms of market outcomes between 3 and 5%. That's higher than where it was 12 months ago. We've got to ensure that this remains under control. We can't just chase inflation. The national wage case coming up in the next few months will be an important signal as to what happens in terms of the safety net that's out there for the lowest paid wage earners. But we can't afford an outcome here which adds into inflation rather than helping to bring some of those pressures off, get back down to that 2 to 3% inflation target, and then we can have sustainable increases and we can deliver real wage increases without blowing the lid off inflation.
And just really quickly, how is business confidence more broadly at the moment?
Well, we saw some real softening in the December quarter. So for the first time, I think the economy has weathered the pandemic and the bounce back from the pandemic through the course of last year really well. But we did start to see a softening in business conditions and business expectations in the December quarter in the data that we're looking at. A big part of that has been rising interest rates through the course of last year. All the more reason why we think that the Reserve Bank really needs to just take stock as it moves in the months ahead. Make sure that it's not damaging the economy, and I think give business time to adjust.
Well, Andrew McKellar from Mackie, thanks so much for your time today.